Okay, let's dive in. In late 2025, the metals market didn't just get hot, it went into a full-blown fever. We're talking about a historic explosion that sent shockwaves through the entire financial world.
On December 26th, silver, what they sometimes call poor man's gold, spiked to over $76 an ounce. Now, this didn't just sneak past the old records from 1980 and 2011. No, it absolutely obliterated them. Analysts were literally scrambling to redraw their charts.
And get this, it wasn't alone. At the very same time, its big brother, gold, just blasted through its own roof, hitting an incredible $4,500 an ounce. This wasn't just a random rally. This was both metals moving in perfect sync, which tells you something really, really big was happening. So the big question is, how did we get here? This wasn't a fluke. It was the perfect storm, a combination of massive forces all hitting at the exact same time. So today, let's play detective. We're going to piece together the clues and solve this financial mystery. All right, our investigation starts with clue number 1, and it's all about the unexpected star of this story, silver. For years, it kind of lived in gold's shadow, but in 2025, it turned into a tech rocket and completely stole the show. But here's the thing you have to understand. This time was totally different. Those old silver rallies, they were mostly about speculation, about fear. But 2025, oh no, this was driven by real, unstoppable industrial demand from factories that needed the metal, crashing head-on with a massive physical shortage. Here's a really simple way to think about it. Imagine the world needs 100 cups of coffee every single day, but we only manage to make 80 cups. Now imagine that happening for 5 years straight. That's exactly what was going on in the silver market. It's not a temporary glitch, it's a deep structural problem. And the numbers are just insane. We're talking a cumulative shortfall of 800 million ounces. To put that in perspective, that's almost an entire year's worth of global mining production that just vanished. The available inventories at the COMEX exchange, down 70%. It got so bad that huge industrial companies just gave up on the paper market and started hoarding the actual physical metal themselves. That, my friends, is a classic supply squeeze. So you're probably asking, where is all this demand coming from? Well, it's basically 3 unstoppable forces. First up, new solar panels that are way more efficient and need 50% more silver. Next, the AI explosion. All those high-performance data centers, they need silver for its perfect conductivity. And third, electric vehicles, which use way more silver than regular gas-powered cars. And here's the kicker. This demand is inelastic. These industries have to have silver. It doesn't matter what it costs. Then, in November of 2025, something happened that changed the game completely. The US government officially designated silver a critical mineral. This was a huge deal. It was the government basically saying our national and economic security actually depends on having enough silver. Think of it this way. For silver, getting that critical mineral label was like a supporting actor winning an Oscar. Overnight, everyone saw it in a completely new light. It wasn't just some industrial metal anymore. It was a strategic national asset. This move unlocked government money for new mines and fast-tracked projects, telling the whole world the shortage was officially real. So silver had this incredible demand story. But that's only half the puzzle. Now, let's look at its big brother, gold. Okay, on to clue number 2. While silver was skyrocketing because of technology, gold was blasting off for a much older, much more primal reason. Pure, simple fear. Gold has always been the ultimate safe place in a crisis, and boy, did late 2025 deliver a crisis. In December, things got really tense in the Caribbean. U.S. forces started seizing oil tankers. Then came a dramatic 5-day chase that ended with the capture of another tanker. It all came to a head when the U.S. labeled the Venezuelan regime a foreign terrorist organization and ordered a total blockade. That kind of instability sends a wave of fear through global markets. And when that happens, where do investors run? To the one safe haven they can actually hold in their hands, physical gold. And it wasn't just regular folks buying gold. Look at this. In the third quarter of 2025, the world's central banks, with China leading the pack, increased their gold buying by a staggering 50% compared to their recent average. They were basically dumping US dollars and swapping them for physical gold as fast as they could. So you've got this squeeze in silver and this fear trade in gold. A pretty explosive mix, right? Well, there was one more thing that came along and threw a match on the whole pile. And that brings us to our third and final clue, the ingredient that poured gasoline on an already raging fire. This was the one thing that truly ignited both metals and sent them into the stratosphere. The big moment came in December when the U.S. Federal Reserve cut interest rates for the third time in a row. Now, that sent a huge flashing signal to the market that the Fed was shifting gears, that it was now more worried about stimulating the economy than fighting inflation. And what's really wild is that inside the Fed, they were all over the place. Some wanted to cut rates even more, while others didn't want to cut at all. The problem was a government shutdown meant they didn't have the latest economic data, so they were essentially flying blind. That confusion told the markets one thing loud and clear: easier money was on the way. And what happens when the Fed signals more easy money? The US dollar gets hammered. It fell nearly 10% in 2025. And here's the simple math. A weaker dollar makes gold and silver cheaper for everyone outside the US to buy, which just pours more fuel on that fire. Okay, so let's recap. We have the industrial squeeze on silver, the geopolitical fear driving gold, and the Fed pumping in the monetary fuel. All the clues are on the table. So what's the verdict? What do the big players on Wall Street think is coming next? Where do we go from here? Well, the consensus is pretty clear. They are overwhelmingly bullish. JP Morgan is looking at $5,000 gold. Citi thinks silver is going to hang out in that $60 to $72 range. Goldman is just bullish across the board. And then you've got guys like Robert Kiyosaki calling for triple-digit silver, like 100, maybe even $200 an ounce. The main takeaway is that the big institutions think this bull market is just getting started. And really, this all boils down to one final huge question that shows how much things have changed. After everything that happened in 2025, the conversation isn't about if you should have some precious metals in your portfolio anymore. The new question, the real question for 2026 and beyond, is how much is enough?